Hello everyone, welcome to Compliance for All live webinar on 1019 and W-9 update, complying with IRS information reporting. My name is Ron and I'm going to be a host for today's session. On behalf of the Compliance for All team, I'd like to thank you all for being part of this event. Today's webinar will be presented by Miles Hutchison. A few words about Miles before we could start off today's session. Miles is a CPA and experienced businessman. He has been an auditor with PricewaterhouseCoopers and the Chief Financial Officer of a $1 billion real estate development company. Miles is a highly sought-after professional speaker and consultant who has presented over 1,000 seminars and training sessions on a myriad of business and financial topics, such as financial analysis and modeling, accounting matters, strategic planning, and compliance with the Sarbanes-Oxley Act. Its clients include Abbott Labs, Citicorp, the FBI, GE, Pfizer, and the U.S. Marine Corps. We are honored to have such a distinguished person such as Miles with us to present today's webinar. Now, ladies and gentlemen, before we begin, I'd like to inform you of the program outline for this training session. This webinar is for 90 minutes duration. First, Miles will take you through today's webinar, highlighting the areas that would be covered, and he will then share with you his presentation. We'd also like to inform all our participants, once you're part of this teleconference, your lines will be placed on mute and would remain so until the Q&A begins towards the end of the webinar. Now, this is for the purpose of avoiding discontinuity and for allowing our presenter to speak clearly. I also request all to hold back your questions until the Q&A window begins. 10 minutes of your time will be allotted to the Q&A, during which your questions will be answered by our presenter. Now, if for any reason you get logged out of this training session or teleconference, please follow the same procedure to join in again. And now that we're all ready to start, I request Miles to take it from here. Miles?
Thank you very much, and welcome everyone. We have quite a bit of material to share with you today. It'll be fairly brisk, but you may go ahead and put questions into the chat box anytime you want to. That way you don't have to worry about retaining that information and trying to remember to put it in at the end of the webinar. In addition, I might be able to pick up on it while we're talking, and perhaps the topics of question are germane to the specific delivery at that moment, and I'll be happy to try to answer them at that time. Most of the questions will probably follow at the end. Okay, so your agenda for today is to take a look at the tax revenue issues related to this type of reporting and disclosure, and to try to help you build some best practices to help you avoid penalties and reduce your risks of what we call CP-2100s or B notices. So we'll take a quick look through the issues and try to make sure you're up to date, and we'll take it from there. The collection issues that the IRS has are reported in something called the tax gap on the IRS website, and you're welcome to Google that at any time. Just simply go into the irs.gov website and use a search box at the top right corner. Type in tax gap. This is the most recent information they have available, 2001 and 2006, and we wanted to point out some information to you just to keep things in perspective with regard to the total tax collections per year. It's about 2.6, 2.7, maybe $2.8 billion now. There's a tax gap of about $450 million. Voluntary compliance takes care of about 17% of that, which leaves about $400 million unaccounted for that has to be chased down. A lot of that has to do with underreporting, and some of that has to do with business income. 122 million starts to focus in on our topic today with regard to 1099 reporting. Finally, small corporations represent about 19 million of this tax, and individual income tax is about 36 million. So what we're trying to do is isolate the issues that would be applicable to 1099 reporting, and we've done that for you. There are a couple $100 million worth of issues that the government's trying to make you responsible for reporting to them so they can chase it down and get it collected. The Patient Protection and Affordable Care Act did eliminate the corporate exemption for 1099 reporting, but then when everybody, quote unquote, read it to find out what was in it, the president said, oh, that was in there? Oh, no, we need to take that back out. So what we have in the way of a corporate exemption for 1099 reporting still exists. It was only contemplated to be removed for a brief moment, and then it was put back. The corporate exemption does not apply to a couple of types of payments, and we'll get to that in just a little bit. But for the most part, corporate exemption is still fine as always. Increased penalties did occur, and you need to be aware of that. The time under which you pay or report has something to do with the size of the penalty. So you can see the old fine in the lonely box in the column 2 there, $50. The new fine structure is if you get caught up within 30 days of the deadline. Let's see, are we still in that 30-day pocket? Yes, we are. Your penalty could be $30 per late filing. The maximum penalties for companies that are classified as large businesses is $250,000 a year. Small businesses have gross receipts or sales under, I believe it's $5 million, and so they're classified as small businesses, and their cap is $75,000. If you're more than 30 days out but get things taken care of by August 1st, of course, you see it jump to $60, and the caps rise. Willful disregard penalty, after August 1st, the penalty rises to $100 per document. Per document. Now, that's per 1099, folks. And the caps, look at those, $1,500,000 versus $500,000. Willful disregard penalty, if you simply do not file your information returns, there's a $250 fine per return in addition to the late filing fee above. There's no cap. And then there's some additional problems, failure to furnish the statements to the payee. Now you're going to double the fine. So there's a fine for not filing with the IRS, and there's a fine for not filing these with the payee. So just 2 times everything above. Failure to file electronically when required, $100 per item. And fraudulent filings, $5,000 plus potential damages payable to the person defrauded. I actually experienced the flip of this in a prior year. I think it was last year. The Canadian Revenue Group sent a document to the IRS that said I was paid thousands and thousands of dollars from somebody that doesn't even exist in Canada. And the IRS then added that to my tax return, sent me a notice of penalties and tax due, and if that had been somebody in the United States that had filed that document and they could track back on them, I would be able to pursue them for defrauding me or attempting to do so. And they would have had the $5,000 fine plus the fraud charges. As it turns out, it was a Canadian firm that doesn't exist, and the Canadian Revenue Group can't find them, the IRS can't find them, and I'm thinking, okay, that looks like money laundering. I wonder what's going on there. So I requested the IRS pursue that. Of course, they have no obligation to report back to me, and I have no idea whether they did. New law came into effect, well, coming into effect versus being released is a bit different, but it's going into effect in 2014. The new law was released in, I think, 2012, and it's called FATCA, the Foreign Account Tax Compliance Act. We mention it here because it had an impact on a number of forms, disclosure forms that we put out to our payees. The W-9 is one of those disclosure forms, and it was affected. So we want you to know about that, and we'll take a look at that effect here in just a couple of minutes. Basically, it is an attempt to create transparency on foreign accounts where a U.S. taxpayer, also known as a U.S. resident or a U.S. non-resident, but a U.S. person, has accounts offshore and is attempting to hide assets and the income on those assets in those offshore accounts. That game is pretty much ending. UBS took a hit of $700+ million of fines because they were actually sending people into the United States to build contacts and try to increase the account balances and new accounts in foreign countries. And while they admitted no wrongdoing, they paid $760 million in fines and gave up the names of the people who hold accounts in their institutions offshore who might be U.S. citizens. And the courts are having a heyday. So this thing is in effect, it's live, it's real, it's happening, and U.S. citizens are encouraged to come forward before they get caught because the fines on them are just massive. So the key elements: foreign financial institutions have to report U.S. citizens' worldwide income by withholding 30% on payments made to the foreign financial institution unless they can identify and report the U.S. citizen accounts in their institution to the United States Treasury or the IRS as required. This requires U.S. taxpayers to report on their tax returns their offshore assets worth an aggregate of $50,000 or more per account. If you are familiar with something called FBAR, Foreign Bank Account Reporting Act, FBAR has not been replaced by FATCA. This is in addition to FBAR. There are two key questions that one should pursue in a proper sequence when trying to establish whether they have a reportable payee. Now, we consider you who are present today to be the payors. I don't have any information on your entities or companies, so I don't know what kind of institutions you work for, and I'll try to keep this as generic as possible to canvass all of you. But the first step that you go through is you look at who you are paying to try to determine whether a W-9 is the proper reporting document to send them and receive back. Next, you identify what you are paying them to determine what you need to report. So first is whether you need to report, and on what do you need to report, what form, and then what goes on the form. So the who are you paying starts with identifying your recipients as either 1099ers or what we call 1042-essers or non-resident aliens. Your exempt payees then are identified underneath that main question, and this eliminates reporting on most corps, government entities, not-for-profits, colleges, universities, churches, IRAs, insurance, assurance, reassurance, and indemnity companies. Then you have non-vendor payees, employees. So we're looking for the 1099 recipient, and the question is, how do we go about further identifying who these people are, and more importantly, who they are not? The next step, within that step, you identify a person as a U.S. person, a resident alien, a non-resident alien, an exempt entity, like I just mentioned, or an employee. So let's go back to the beginning. A resident alien or a U.S. person. These are your W-9ers. Your non-resident aliens are your W-8ers, W-8. I don't know if you know this, but there are now 5 W-8s instead of 4. So things have changed, and that could give rise to the additional form and an expansion, a substantial expansion of the W-8 forms. The impact on W-9s isn't nearly as significant. You need to consider some standard policies and practices, and that's what this slide number 10 is about. Explain your company policy of requiring a Form W-9 in order to set up new vendors in your system. We think that is a very important standard that you should set. It is not required by law that you set this standard, but it is strongly advisable for your company to avoid the risk of having to pay backup withholding out of the company pocket when it should have come out of the payee's pocket, that you follow this policy. If they continue to refuse to supply you with a W-9, state your company's intention to comply with the IRS's backup withholding requirement. Since you are unable to establish, due to the lack of a W-9, sufficient information to determine the reportable status and the backup withholding risks associated with this entity that you're paying, then you could consider immediately invoking the 28% backup withholding on your W-9ers, or if you're uncertain as to whether they're a non-resident alien, you go to 30% backup withholding. Non-resident aliens, unless they have an exemption due to a tax treaty, are subject to 30% backup withholding on the first dollar paid to them. The 28% related to W-9 people, this is your U.S. residents or your resident aliens, is 28% backup withholding if they fail to supply you all the information required, or if that information turns out to be incorrect according to the IRS via a disclosure or notice to you, commonly referred to as a B notice. So, if you don't have the proper documentation, you can't prove that the person that you're paying is exempt from reporting. You don't know either whether they're subject to backup withholding. So if you would like to incite, induce, put pressure on the payee to give you the proper form, don't pay them. That's your starting point. Simply don't pay them. Or if you're pressured into paying without the document, backup withhold. Now, this creates some reporting and paying and disclosure requirements, but it keeps the money from coming out of the company pocket if you're wrong. Offer to send the vendor an electronic fill-in form. The PDF for the W-9 is available for download from the IRS website. We're all accessible to that, so take advantage. Be sure that you use a current form. They changed the form due to FATCA, and that form came out late 2013. So we'll talk about that a little bit more in a minute, but you do not want to be using stale forms. These protocols tend to resolve the issues, but probably not without creating some tension with the payee. Do your best to be politically correct and a good service support person to the organization and to the payee while you're still following or invoking company policy. The second step is to determine what you're paying. Once you have the W-9 in hand, now it's time to figure out, well, what are we paying this individual or this entity, and is it subject to reporting? Services are basically subject to reporting, and they're categorized as what we call FDAP income. FDAP income, that's fixed, determinable, annual, or periodic. That is a very broad brush stroke. Fixed, determinable, annual, or periodic. FDAP income is described in Pub 515 on page 15 and following. So Pub 515 was intended initially for use by non-resident aliens to help them understand what their reporting and disclosure requirements are and help them fill out a Form W-8 and know to expect to receive a 1042-S. But when the IRS came to describing or explaining FDAP income, they did not provide us with that information in detail in any other pub, so we have to turn to the non-resident alien pub 515 to help us find this information. That's where you're going to find your FDAP income explanation. Then there is a table of reportable payments that is available from the IRS's General Instructions for Information Returns. This I-1099-GI, which is mentioned at the end of the link on the page there, and I'm sorry the links aren't hot, but at least you have it and you know where to go. This information about reportable payments is broken down by form. So they go through all the 1099 types, they go through the 1042-S, They have a nice tablature layout for you to describe what's reportable on each of the forms, and it even shows another column with the thresholds of the amounts that must be reported. For example, the $600 threshold that you're familiar with on your 1099s, that's listed there as well. Some best practices: require them to prepare and complete that W-9 and indicate their reportable or exempt status. Only set up new vendors after you have received this W-9, and we recommend that you join us for a course talking about the 10 matching system available from the IRS. This is the tax ID matching system, which is free. We can share that with you in an upcoming webinar if you're interested. Then once you've validated the W-9 ID number and name that they're going to match the IRS's information, you now have the ability to set up your vendor master record or your payee master record in an appropriate fashion. You know what to put into that record with regarding the reportable name and the tax ID number and whether payments to this payee are reportable or not. You probably want to set up a trigger in that master record as to whether a 1099 is required. Now, some of your master records may not contain a place for that or a field for it, so you might want to think about an unused field that is an on-off switch or could be used as an on-off switch that you might translate into this purpose. Talk with your IT department about the maybe the cannibalization of a field in the record that may not be usable or used by any other purpose, and you could then translate it into this purpose. Develop a policy and procedure stack or packet to document your practices with regard to compliance with regulatory agencies. If you don't have that now, it's very important to get that set up. These are your W-9 forms. This was August 2013. This is the current form. This is the whole form, but there are instructions that begin on the face below this form, right on the face page, and continue for 2 more pages. If you haven't read those instructions, you ought to take some time and peruse them, because you'll get some very helpful information out of that read. So again, notice that this is an August 2013 date. The next step you need to think about is, are you using an older version of the form and continuing to send it out to new payees? You don't want to be doing that, because this form contains information about FATCA, and they've changed the disregarded entity structure of the call-outs on this form. So you have a number of different new reporting methods and new reporting requirements. Now listen carefully. If you have old W-9s on payees that you sent out prior to August 2013, they are still good. You do not have to replace any old W-9 requests that you made to the payees prior to August 2013. Everything you've done after that date is supposed to use this form. If you did not do it right, fix it. Send out a new W-9 for all payee inquiries after July of 2013 using this form. The name lines, there are 2 of them on the form. Let me back up and let you see that. There are 2 lines on the form. I think I can even highlight that for you. Here's line 1 and here's line 2. Line 1 is very important to get right. So let's go to the next slide. Here's line 1. The name as shown on their tax return needs to go on line 1. This is the name that would appropriately associate to the ID number they're going to provide later on the form. The ID number is in Part 1. The ID number can be their social, or it can be their EIN, or it could be an I-10, and we're going to talk about an I-10 here in a moment. So the name on the first line must line up with or match the ID number given in Part 1. The business name that you use to pay this payee can go on line 2. Can go on line 2, okay? But the tax reporting name must go on line 1, or you will receive notices from the IRS of a name-number mismatch. Next is the guideline with regard to the type of entity that you are dealing with. There are some changes in 2012 to the form, which included the elimination of the term disregarded entity. I think you can spot that the disregarded entity term is missing here. And then we brought in the FATCA rules in 2013, so that's stacked on top of the disregarded entity disappearing. So there's your FATCA, and I can't circle disregarded entity because it's gone. What we have is we have limited liability companies mentioned, a requirement for them to insert what type they are, whether they're a C, S, or P, corporation, S Corp, or partnership, and then they can put their exempt payee code in related to that designation. Other could be used for election campaigns, nonprofit associations, and things of that nature. Okay? All right, the disregarded entity indicator will be what you do, the preparer payee does with this name line. And here's your note, the only place on the form now that uses the word disregarded entity. A disregarded entity is an entity that is an LLC that only has one owner. And that owner elects, here we go, and that owner elects not to use the corporate ID for income tax purposes. Rather, they choose to use their personal ID and run the income, profits, and losses through their personal return using Schedule C or one of the other attachments to a 1040. Okay, that's what disregarded entity is about. So they would check this limited liability company. They would put in their designation over here on the underline as to C, S, or P, and then in the name line, they'd put their disregarded entity name or person name. Okay? So the next step is dealing with the ID number that the payee sends you. We don't have any absolutes here. We will tell you the IRS prefers that you obtain a Social Security number. I will tell you that I would prefer that you avoid that wherever possible, because this item, the Social Security number, is a Privacy Act issue. If you have Social Security numbers in your records, you must maintain the privacy of that information, and access to that data is only on an as-needed basis. You cannot keep those files open on a server, unlocked physically. They must be controlled. If you violate that, you're violating the Privacy Act. I do not want to deal with Social Security numbers wherever possible. The government wants them to use their social. We want them to use an EIN, if at all possible, because we don't have the same due diligence and trust responsibilities over those ID numbers that we do over socials. Regardless of the number they use, it must match line 1, the name on line 1. Here are the types of TINs that you might receive. An EIN, we already know what that is, Employer Identification Number or Tax ID number. But what about this one? This is issued, an ITIN, to a person who does not qualify for Social Security benefits. The 9-8 issue that flags this number as unique and indicating that it is not a social is as follows. A 9 will be positioned in the first position of the number. So there will be 3 digits, the first digit of which will be a 9. In the 4th digit, following the first hyphen, in the 4th digit, there will be either an 8 or a 7. So we commonly refer to this as the 9-8 rule, but it isn't 9 and 8 in the first 2 positions. It's 9 in the first position. Everybody write this down. It's hard to find it. It's 9 in the first position, and it's a 7 or an 8 in the 4th position of the number. I can't tell you where I found that. I think it was in the I-1099-GI, the information, the general instructions for information returns. I believe that's where I found it. There might be a discussion of it in Pub 15 or Circular E. But, you know, it's a very important thing to know. You can go to the IRS website, go to the search box and type in ITIN, and you'll get some indicia there as well. An A10, hopefully you will not see an A10. An A10 is an adoption TIN and is usually replaced when the person is adopted by a valid or legit Social Security number. So typically by the time this person is eligible to work, they will have a social and the A10 will be gone. W-9 guidelines on the perjury side. The signature question. Is the signature required on all forms W-9? Now, if you have read the instructions that are below the form, you should know this answer. And then I would ask you, what is the company's policy with regard to the signature line? Does your company require the preparer of the W-9, the payee, to sign the form? Now, I'm going to tell you what the rules are. The rules, according to the IRS regulations, are that the signature line is not required unless there is a problem with a past W-9 form indicated by the receipt by the payer from the IRS of a notice of a mismatch between the name and the number. That notice is referred to as a CP-2100 or a D-notice letter from the IRS. They come out in, I think, May and October of each year. So if you received one of those and you went through your records and discovered that you made no mistakes, the W-9 information and the 1099 information match, and the IRS says, well, this name and number don't match our records, then you must send out another W-9 and you must require the payee to sign it. And that is instructed in the B-notice letter samples that come with the CP-2100 letter from the IRS. Okay. There could be another situation. I'm trying to think if there's another situation where this is required to be signed. Besides the regulation side, your policies can require a signature on this line. If you look at the instructions below this particular form, the W-9, you'll see everything I'm telling you. Okay, the FATCA designation. The FATCA codes, you're signing under penalties of perjury that the FATCA reporting that you're stating on this form is correct. That's new as well. That's what's on the new August 2013 form. Okay, the ones that require signature under penalties of perjury include the W-9 submitted after the first B notice. Then there are interest and dividend notices and broker-dealers and original issued discount, patronage dividends, and real estate transactions. So I look at this primarily as a 1099 MISC topic, but I have to tell you that interest, dividends, brokers, etc., those 6 different forms down there, W-9s prepared on behalf of supporting those information reports must be signed. Okay. Some FAQs. How long are these forms good for? Can we work from copies or email attachments? Can we use substitute forms? When must we have original signatures? The first one, how long are they good for? Until a change occurs in information on the form. Can we work from copies? Yes, unless the signatures are required, and then a fax or a copy must be supported by a follow-up original. Can you use substitute full forms? Yes, but the language that is in the certification section must be an exact match to the W-9 that I've shown you. Did you hear that? The certification section, Part 2, must be an exact match, word for word. When must we have original signatures? Back to the previous slide for that one. The 10 matching system. Once you've received the W-9, strongly recommend you perform this 10 match with the IRS records. You can go online and do up to 25 of these in a single session. You can have multiple sessions per day. You can upload a flat file. It's a text file of up to 100,000 name number combos, and the IRS will report back to you within 30 minutes to an hour in most cases, and they'll do it within a day for sure. It's an internet-based system. It's free. It helps you avoid problems with bad or incorrect Form W-9 name and number mismatches. It'll help you ensure the payer is not subject to additional fines, and liability for failure to properly perform backup withholding. You might want to join us to learn more about that. This is the transmittal form that goes with a 1099. I've circled some information here looking for the total number of forms, the federal income tax withheld, the total amount reported on the forms that are attached, and it says on line 6, it says enter an X in only one box below. Do you guys see that? In only one box below. This transmittal can be used for all of those different forms, but you can only put one type of form behind a 1096. In other words, every form change-up requires another 1096 transmittal. It's like a batch header for the stack. Your backup withholding. There's 4 reasons backup withholding could have to occur. They didn't provide you with a W-9 prior to making a payment. You don't know whether they're subject to backup withholding or not. A B notice is sent to you and they don't respond with the appropriate documentation within the required time period. There is a short clock on that. C notices. They're sent to financial institutions for payment of interest and dividends. It's like a B notice. You've got a name number mismatch. Where payee fails to certify that they're not subject to backup withholding on a W-9 form. Procedures for the backup withholding. W-9s are subjected to, W-9 1099s are subjected to a 28% backup withholding. But if you're not sure if the person or entity is a U.S. person or non-resident alien, then 30% would be the backup withholding level, but that applies to W-8s and 1042Ss. You might need to take the more aggressive stance to protect the company from the other 2%. I would look at volume, I'd look at the exposure, and I'd decide, whether I, A, need to do backup withholding to get their attention. Sometimes you may have to do that. And B, whether I need to use the 28% rate or the 30% rate. 28% for 1099ers, 30% for 1042Sers. You stop withholding within 30 days of compliance. We've got a footnote for you on that. You begin the deposits of the withholdings with the IRS, probably using your EFTPS system. I don't know anybody that isn't on EFTPS anymore. You determine the rules for the timely deposits based on the rules that are behind your 941 deposits. So you look at Pub 15 for your deposit requirements, and that will thread over onto what you call your 945 deposits. These backup withholdings are not 941. This is not related to employees. 945 is related to backup withholding, like a 941 is related to employee payroll withholdings. So there you are. It's an annual form instead of quarterly. You'll see a snapshot of it. Okay, so our footnote to go with the within 30 days of compliance is the I-1099-GI, the information, general instructions for information returns. It's on page 14, and I even tell you the section and the part number. Here's your 945. It's shorter than a 941. It's a little bit stretched here in the photo, but there's your backup withholding line. And then your monthly schedule of when these liabilities occurred. And you can, if it's smaller than $2,000, you can send it in with the form. I don't know if there's a voucher for this one or not. I believe there is. So for FDAP income, your 1099 guidelines with this FDAP income, I don't know if you remember what pub I told you that was in. It was on a previous slide. It was printed on the slide. It's pub 515. The FDAP income that is applicable to 1099s is annuities, dividends, interest, medical care payments, middleman payments. Those are called intermediaries. patronage dividends, premiums, real estate transactions, rents, royalties, services of independent service providers. And they call it independent personal services when you see it in the Pub 515. Dependent personal services means they're an employee. Independent personal services means services provided by a contractor. Settlements, that's legal settlements. Third-party gifts. Now, the things that are FDAP income, but reporting is not required. Gains, profits, salaries, wages, W-2s, commissions, W-2s, commissions, W-2s, distributable net income of an estate or trust, I don't know, taxes and mortgage interest or insurance premiums, purses paid to non-resident alien boxers for prize fights, prizes awards to non-resident alien artists for pictures. You're going to see these elsewhere, but not on the 1099. Prizes awarded to non-resident alien professional golfers in golfing tournaments, etc. in the U.S. When their income is sourced to the United States, they could end up seeing this information reported on a 1042-S, but not on a 1099. Non-resident aliens, they need to provide you, like I said before, with a different form. It is the Form W-8 as appropriate. There's also a treaty exemption form, 8233, that applies. You might want to join us for a non-resident alien class at the appropriate time if you're interested in this topic. We're just giving you a few brief comments about non-resident aliens. There's a whole body of work out there that relates to this type of payee. These folks, again, are subject to the 30% backup withholding, and it's on $1 unless they can show that they're exempt for some part of the payment due to a tax treaty between the United States and their country. That's different from a 1099 where backup withholding is due because the person doesn't report to you or respond to you on a W-9 like they're supposed to, and or the IRS sends you a notice that the name and number mismatch on the 1099 compared to their records. With a non-resident alien, it's, you know what, we need to collect that money while we can, and if they want some of it back, they need to file a tax return to get it back and prove that they're due a refund. The common 1099, the 1099 MISC. That's the main subject of the W-9 for our topic purposes today. If you're a financial institution, that may not be your main interest. You might be interested in INT, the 1099 INT. We'll take that as a question at the end. Here we have some challenges. I think that's a nice way to put it, on what goes on this form and where does it go on this form. It's a little bit difficult to put this together. I have a very long list and discussion that goes with this form as to what goes on it and where it goes. I'm not going to go through that entire liturgy with you. Unfortunately, when we found this schedule or list and discussion, we found it in a website that no longer provides this information, so it could go out of date, even on me. So I would depend, if I were you, on the general instructions for information returns as my first step, and then I would turn to the instructions for 1099-MISC as my second step to help guide me through what goes on this form. Now, let's take a look through the specific cells or spots, sections of this form. We're going to look at rents for just a moment. There are a lot of different types of rents, but rent paid to pretty much anybody but a corporation is going to go in this box. And if the rents are over $600 for the calendar year, it has to be reported here. That's rents on real estate, rents on equipment, rent. Royalties. The threshold is different for royalties. It is not $600. If any of you know what the threshold is for royalties, type it into the chat box now, real quick. Keep it real simple. Go quick. Anybody know? I'll wait and see if you guys come up with it. I'm going to skip box 3, 4, and 5. I'm not going to talk about. They're pretty obvious. well, 4 is. 5, unless you're from Alaska, that probably doesn't apply to you, or Louisiana, perhaps. Fishing boat proceeds. Deadliest catch brings to mind the types of reportable payments that might go in Box 5. Box 6 is really important, though. If you make payments to medical service providers, please distinguish what I'm saying and contrast it from the term medical insurance premiums. We're not talking about insurance premiums here, folks. We're talking about payments made to medical service providers. They are due a 1099, even if they're a corporation. There is no shelter from reporting for medical service providers. Okay. 7. Box 7 is the long list of things that get reported on this form, or the most widely used. Let's put it that way, the most widely used box on this form. Box 7 is for non-employee compensation. So now we're talking about independent service providers, and the payments for services go in this box. We get all kinds of questions about this box, though. What happens if the payment that you're making to the service provider includes repair parts and installation labor or repair labor? Okay, the minimum requirement for this box is the service labor has to go in this box. Listen carefully. The minimum requirement is to put the service labor in this box. Folks, if you want to put everything you paid that recipient in that box, I don't care. The IRS doesn't care. The payee recipient might care. And my question to them, if they start bugging you about it, is, why do you care? Are you planning to leave some of this revenue off of your tax return? Well, no, I'm going to report it all. Then why are you crying to me? It's all reportable. I reported it to you. We're done. Thank you for the call. You're done. Sometimes that raises some questions. We'll wait and see. Anybody come up with that royalties threshold? Nobody? $10. Royalties, $10, folks. It's the smallest or lowest threshold of these information returns. Now, I'm going to stitch back to that medical box for just a moment because some people don't know this. I'm going to list a few things that go in this box. Here we go. Payments to hospitals are for medical care, other than nonprofit hospitals that qualify under 501c3. Payments to emergency care clinics, physicians, and get this, veterinarians. Payments for medical office visits, including employee physicals. Payments for physical therapy or other types of therapy. Payments to opticians, optometrists, but not the purchase of glasses. Payments for nursing home care, dentists and dental care, x-rays, lab services, drug tests. I hope you got all that. If you did not and you need me to repeat it, write down the slide number 27 and ask me to go back to it, and I can list it again at the end of the session. Now, non-employee comp for box 7, that is the main box. What goes in here? I've already started, and I will suggest some additional notes for you. Professional service fees, fees to attorneys, accountants, architects, and you might say, wait a minute, attorneys? I thought attorneys went in box 14. Take a look at box 14, everybody. Gross proceeds paid to an attorney. Okay, let's get this straight. Box 7 is for payments you make to your own attorneys. Box 14 is for payments you make when you lose to another attorney, or you negotiate a settlement with another attorney and their client. The gross proceeds paid to another attorney, not yours. You don't pay proceeds to your attorney. Your attorney would have had to sue you to do that. So they wouldn't be your attorney anymore, and that would be a box 14 payment. But when you're making payments to your attorneys for defense, advice, etc., that goes in box 7. And there is no corporate exemption. All payments to all attorneys get reported on this form. All. Okay? Next item. Fees paid by one professional to another, such as a fee splitting or referral fee situation. So you might write the check to one attorney and the attorney splits the check with another attorney. That's not your problem. You write the check to an attorney, you put the whole proceeds in here. It doesn't matter how it's going to get split up between them and anybody else, including their client. You put the whole amount in here. The attorneys should have figured this out by now, that there is no negotiating out of this. This is a done deal, and it's been around for a long time, so hopefully you won't have to have the conversation. You just report it. Fees paid, let's see, payments by attorneys to witnesses or experts in a legal adjudication would go in box 7. Payments for services, including payment for parts or materials used to perform the services if supplying the parts or materials are incidental to providing the service, like car repairs. I gave you that example. Payments for service such as printing, advertising, catering, messenger service, custodial fees, electrical repairs, plumbing repairs, lawn maintenance, pest control services, and construction. Dump it all in there, folks. When in doubt, hear this, when in doubt, report it. When in doubt, report it. You don't get in trouble with the IRS for reporting something you did not have to report. You get in trouble with them for not reporting something you did have to report. When in doubt, send it out. Okay? Good practice. Now, with regard to payments to corporations, well, there's gross proceeds paid to an attorney. I think I've covered that. And the other income, oh, yeah, we need to talk about that for a moment. Other income. This box 3, this dumping ground, be very careful with that box, because any payment made to someone that would be subjected to self-employment tax, you're going to have trouble finding this, so write this down. Any payments you make and report on this form that would be subject to SE tax cannot go in box 3. Box 3 is for payments that are reportable and are taxable but not subject to SE tax, and it's hard to discover that. If you go to the General Instructions for Information Returns and you read about box 3, you eventually see this little tip or a little note about SE tax not applying to these amounts. That's a very important item. Highlight that when you find it in the source documents. The reference I gave you is the General Instructions for Information Returns. This box 3 other can be used for some strange things. Settlements related to injuries. Payments that you make directly to the beneficiary of the payment. The beneficiary not being the lawyer. So you could have some medical payment settlements. I want to be cautious here. I want to tell you that in that box 3 area, if you're concerned about whether something should go in there with regard to pain and suffering, etc., you probably need to involve legal counsel to advise you on what to put in that box. They were probably involved in the settlement with the person who might be an employee, it might be another injured party, so that attorney needs to help you with what goes in that box. And they need to have a tax capability, tax expertise in order to guide you through that. So it's an interesting read, but it's not simple. Okay. Oh, there's one more issue. Prizes and awards go in there. That's not the issue. The issue is when you have an employee, let's say, God forbid, you had an employee in 2013 who passed away toward the end of the year. And to settle up their final wage payment, the payment's being made in the new year, 2014. It's probably being made to the estate, and if it's being made to the estate and it's being made after the end of the year of death, it is not subject to SE tax. It doesn't go on a W-2. It goes in box 3 of 1099. That is discussed in the General Instructions for Information Returns. This second 10 not, that doesn't mean not, that's abbreviated. It's a second 10 notification is what it stands for. And this box is to be used carefully. Only upon having complied with a Type to B notice. It's called a second B notice. You have been told by the IRS about 2 different information returns over 2 different reporting periods that have a name-number mismatch on the same payee. You have performed all of the due diligence that you're required to perform under your CP-2100. You've sent out a first B notice. You got new information. You did another 1099. You got another B notice because it still isn't right, and you have resolved that one. Then you can check this box, and it says to the IRS, you know what? We've done everything we can to match up to your records, and if you can't match it now, don't talk to us. It's one of those don't call us, we'll call you things, and you get to push back on the IRS. Be very careful not to check that box unless you've gone through a first and a second B notification with the payee, and you are finished. So, payments to corporations, generally not reportable, but there are exceptions. These are the ones you do report. I've already said something about medical and health care. Withheld federal income tax or foreign tax. If you've withheld on them, you report them. So why would that happen? Oh, let's see. They refuse to give you the W-9 because they're a corporation and they get obstinate about it. You back up withhold, send them a short payment, and they go, you can't do that. Yes, we can. You didn't read the instructions. We told you that you have to give us that W-9, and if you don't, we perform backup withholding. Oh, okay, well, we'll send you the W-9. Now, give us our backup withholding. No, sorry, I had to send that to the government. Oh, they get upset when you do that. So tell them up front, hey, if I don't get a W-9 from you and you force me to cut this check, it will be short, and the rest of your money will be at the IRS. You can file a return with them and request a refund. That's the only way you're going to get this money. And then they just get so stubborn, and then they finally learn when you do it. It doesn't take long for corporations to figure out this is not a smart move on their part. It's better for them to fill out the form and not have this happen. So if you do backup withhold on a corporation, then you have to file a form, 1099, with them and show the backup withholding so that that's reported to the IRS and associated to the payee so that the payee can get a refund of it. Barter exchange transactions, that goes on 1099-B, and it doesn't matter if a corporation is involved. Substitute payments in lieu of dividends. Acquisition and abandonments of secured property. We have a lot of that going on right now. Cancellation of debt, 1099-C. There is a Mortgage Relief Act that addresses 1099-C. If you are a financial institution and you have foreclosed on residential property, up to $2 million through 2013, you should already know that they're not subject to a 1099-C. The forgiveness of debt, which ordinarily triggers what's called phantom income, does not apply in the conditions that I stated. There's a Mortgage Relief Act out there. I don't have the quote for its name or its date, but I know it expired at the end of 2013, and the question is, will it be reinstituted by the Congress? We do not know. Payments of attorney's fees, gross proceeds paid to your attorneys, two attorneys, either goes in box 7 or box 14 as I described earlier. Fish purchases for cash, doesn't matter if they're a corporation, it still gets reported. Credits of clean energy renewables, Gulf tax credit bonds, etc. Oh, look at that. Merchant card and third-party network payments. Check out 1099-K. You're going to see an example of that in just a minute. Federal executive agency payments. Hope that doesn't apply to you. But I have the rev ruling for you and the page number just in case. It's 1,000 pages into the rev ruling. What about P-card reporting? Well, a new section 6050W was instituted. I'm trying to remember when that was. I think that was 2012, I believe. And what happened there is a new public law was released that said that the merchant card provider, get that, the merchant card provider is mandated to report any reportable payments with regard to procurement cards or credit cards. So if you bought something from a local Ace hardware store and that ACE hardware is owned by a partnership or an individual, you paid by credit card, the merchant card provider has to find all the payments made to that ACE hardware store on all of their cards for the year and put it on a 1099-K by month. You're going to see a picture of it here in just a second. There you go. See that? Effective January 1st, 2012. So that's section 6050W. That was a new section that was added to the code. And it was about time. We were very glad to see this happen. Here's your 1099-K. Hopefully you're not this type of vendor or payor, and therefore the merchant card provider is taking care of you. But look at that, January to December. They got to do it by month. So ACE will get one report from a specific merchant card issuer for all payments made to them by that merchant card issuer. It isn't tied to who bought, it's tied to the merchant card provider. So it's rolled up to a higher level. It's a very interesting concept. And the merchant card providers are just batty over the whole thing. They did not have champagne when this came out. The number of payment transactions is also required. Wild. Electronic transmission of your forms to your payees. This can be done. So now we're back to 1099 reporting, and if you're a financial institution and you've got tens of thousands or hundreds of thousands of these forms to put out, you're probably going to want to do this electronically, and you've probably already figured out how to do it. There's a pub available that gives the protocols for substitute forms, and that pub is pub 1179. Write that down, please, 1179. It's a RevProc, Revenue Procedure 2011-60, Revenue Procedure 2011-60. Pub 1179 addresses this whole process. The basic rules are that you must obtain consent from the recipient to receive an electronic version of the 1099. They must receive the consent in an electronic form. You must get it back in an electronic form, which proves that they have the ability to communicate electronically. You could identify hardware and software requirements that they have to have in order to get access. Usually this is done through a web portal, so they shouldn't have to have anything more than Microsoft Explorer or Firefox or whatever, Chrome, Google Chrome. Prior to furnishing the statements, you must provide the recipient a statement with the following statements prominently displayed. That if they don't give consent, they can get a paper copy. The scope and duration of the consent, which can be open-ended. How to obtain a paper copy after giving consent. How to withdraw consent. Notice of termination if you terminate. Procedures to update the recipient's information if it should change. A description of the hardware and software required to access, print, and retain a statement. All of this is in Pub 1179. Flip side, not talking about the recipients, now we're talking about sending to the IRS. 250 documents, send it electronically. It's required. Don't do it right, $100 fine per document. First, you register with Form 4419. You get your FIRE number, your ID number, and your PIN. You've got Pub 1220 that backs you up on filing electronic returns. That's the FIRE system. You've got Pub 1582, which supplies you with a list of vendors and who are the software providers that can do this for you. You automatically extend your deadline to the IRS to March 31st from February 28th. That's why I said, yeah, we're still in that gap period where if you get it done and you're late, you're only going to be charged $30 instead of $60. Additional automatic extension of time can be added to this. That's Form 8809, and you can push out your filing deadline to April 30. The 8809 must be filed with the IRS by the due date of the original forms. If they were paper, that's February 28th. If they are electronic, that's March 31st. And you can push your deadline out with this Form 8809 by another 30 days. If you're paper, that means to March 31st. If you're electronic, that means to April 30. I like this system. Saving paper, push the button. Oh yeah, all the work's done in advance of pushing the button. No postage, an extended deadline, and with an 8809, all the way to April 30. This is great because when do these people start bugging you about, I think there's something wrong with my form? Answer is this week and next week, right? So if you push this out to April 30, you would not have corrections with the IRS where you made mistakes. You'd correct the form with the payee. You'd make the correction in your records, and you haven't filed with the IRS yet, so you don't have to go through the corrections process. And if you haven't looked at that corrections process, you should. If you go to the General Instructions for Information Returns, I believe it's page 14, you will see what you have to do. There's a type 1 correction and a type 2, and I'll be willing to bet most of you don't know there's two different types, and depending on the type, there's a different way to respond to the correction process with the IRS. It's ugly. So you want to use these extensions every single year. Don't worry about this possibly raising an audit flag. No, it doesn't. They know what you're doing. They know you're trying to get them right before you send them in. Use the extension. Avoiding penalties. If you start using the systems and the procedures that we've talked about today, and you get that documented, and you use this system consistently, including the 10-match system that we've talked about briefly, you're going to be in very good shape should the IRS send you a notice of proposed penalty, which is listed down here as letter number 972CG. This could be the kiss of death, folks. This is a very nasty letter. It's pages and pages long. You need to properly document your processes, maintain a culture of compliance, timely respond to everything the IRS sends out. Respond to vendors when you're supposed to, interdepartment issues if you're supposed to, only to the IRS when you're supposed to. Diligently maintain your files and your documentation. Prepare yourself for your audit inquiries. This filing season is basically over, so you're probably looking at this in hindsight. Some of you may still be on extension and trying to make sure you dot your I's and cross your T's for 2013. Regardless, think of this as your 2014 early planning. If it's not your 2013, oh my gosh, we should have planned better planning. Complete your procedures. Use the checklists and cheat sheets that are available in the IRS pubs. You've got Pub 15. You've got the General Instructions for Information Returns that regard filing corrections, and you've got your Pub 1179. If you're electronic for your filing of your documents, your information returns with the government, I think that's Pub 1220, isn't it? Yep, Pub 1220, and you have a correction, the question then becomes, well, do you have to file the correction electronically? You only have a few. The answer is no. You can file them in paper form, even though you had to file the forms themselves electronically. You can file your corrections, if there's less than 250, in paper form. So that takes you back to the General Instructions for Information Returns, page 14. If you're going to file them electronically, you use Pub 1220 for your guidelines. They're closely associated, but when you're using flat file record filing, there's more to it to file the correction. Identify the follow-up and follow up with your vendors where you don't have the proper forms W-9. Get those taken care of, folks. If you don't have a W-9 on a payee that's receiving service-based payments, you need to get it. If you don't have a W-9 on all your vendors, you need to get one. Eventually, what they tried to do in Obamacare with the Affordable Care Act and taking away the corporate exemption, they will eventually do that. We've been telling folks for 20 years that's coming. They actually tried it. There was such an uproar and how it was disassociated with the medical aspects of the Affordable Care Act that it seemed ridiculous to be stored or found in that particular law. They took it out. People, they're going to stick it in somewhere, and you're going to need those W-9s. So let's start getting them now. Nobody should be surprised at your demand for a W-9. Make that your standard policy. Don't put your payables people in a position, or better yet, don't put your purchasing people in the position of trying to determine when they do and don't need a W-9. The answer is, we always need one. Make that your policy. Institute an electronic substitute reporting system, Pub 1179. Prepare for electronic filing with the IRS, Pub 1220. Be sure you've corrected all issues identified in your CP-2100 notices before you send out a new set of 1099s. Perform a global 10 match of your W-9s in late December, early January. Do it every year. You need to join us for our 10 match course, because I'm going to tell you that that suggestion is out of sync with the IRS's standards, what the regulation says. It says once you've matched a number and a name, you're not to attempt to do it a second time. But there's no penalty for doing it, and that's why I'm saying do it anyway. Make sure that you've got a clean database before you produce 1099s at the end of each year. Test your software early. Make sure it's working. You're required to do that under Pub 1220. Report to recipients early. Report to the government as late as possible. Apply a good faith approach that we've talked about here, and you will minimize, if not eliminate, your risk of a proposed penalty for failure to properly disclose to the IRS. With regard to upgrades, there's some resources for you. I recommend that you have management approval and leadership support for using an electronic methodology, both with the IRS and with the payees. Know how these regulations affect your company, and congratulations to you for being with us today and taking a look at this this volume of information. Make sure you have the resources and systems to go through this process. When you have to go through an upgrade with regard to changing your reporting because the forms change or what's required on the forms changes, then it's important to go through this process early in the season to make sure that you have a solid action plan, that you get everything done and ready to go before you get to the pressure of the deadlines at the end of the year. As far as policy and procedure documentation, I would never try to reinvent that wheel from scratch. You can go to SOXpolicies.com and find a plethora of tools and templates to kind of help you get started there. The forms and instructions, irs.gov, here they are. The 1099 GI, I've mentioned it over and over and over today. 463 is regarding travel and entertainment expenses. Sometimes a question comes up, well, what if I pay service payments to someone who also traveled and I put that in a single check, and I don't really have it broken out in my records by vendor? The answer is you can dump the travel and entertainment expense into 1099 Miss Box 7 along with the service payments. That recipient may be upset with you, but hey, it's not your problem. If you can't break it out, you don't have to break it out. If you can break it out and you want to break it out, it builds better relationship with the payee, and you might go ahead and do that. But if you can't, you can't. The IRS is not going to be upset with you, but the payee might. I have a number of events during the year where I travel to teach, and most everybody is dumping all the travel expenses in with the service payments in Box 7. I've gotten used to it. I know what to do to break it out, and if the government ever calls me and says, why does the 1099 have more money on it than you reported on your tax return, it's like, I got reimbursed for travel expenses under an accountable plan that met the federal regulations, and I took it out of the 1099. It's not my fault they stuck it in there, and the IRS has to work with that. Now, they can choose to audit me, but they would have to do that to satisfy themselves that I took the right amount and performed a set-aside on it. The backup withholding pub, 1281, for missing and incorrect 10s. That's your B-Notice pub. We talk about that in the 10-match and B-Notice class. 1582, information return vendor list. This is your third-party sourcing. Mentioned it here today. 1586, we talk about that in our 10-match course and B-Notice course. Reasonable cause regulations. These are important regulations to know where they are just in case you receive a 972 CG. If you ever receive a CP-2100, it is expected that you may receive a 972 CG. So you need your reasonable cause language to defend against that proposed penalty. That letter we've formatted, and it's, I think, 9 pages long. It's like a check-the-box type of letter where you can use the proper reg quotes, the statements about what's in the reg, and then how you complied with that reasonable cause component and why you defend against a proposed penalty with that reg section. And then the 10 matching program, the discussion of that is under Pub 2108A, in case you want to take a self-guided tour. Well, that brings us to that moment in our day where you have an opportunity to consult with me. So if you have some questions you'd like to ask, you're certainly at liberty to do so. And I think Ron's available for you to MC that. Go ahead, Ron.
Thank you, Miles, for the wonderful presentation. And I would also like to thank all participants for cooperating with us. As Miles mentioned, it's time for the Q&A to begin, and I request all who have questions for our presenter to click on the Raise Hand option, which is a palm-like icon at the bottom of your participants panel. Now, ladies and gentlemen, this is to ask your questions verbally, or you can also post in your questions in the Q&A panel so that our presenter can read it out loud and then answer it for you. Now, if for any reason you're unable to ask your questions using either of two means that I just mentioned, you can share your question with me through chat, and I shall pass it on to our presenter to get that answered for you. And in the meantime, ladies and gentlemen, as we're waiting for the Q&A, for the questions to come up, I kindly request you to share your feedback in the feedback form that has just appeared on your polling panel right now. As you can see, the feedback has just 8 questions, mostly multiple choice in nature, and it wouldn't take more than 2 minutes of your time to answer this. This polling would remain open till the end of the session, so you can answer it even after the Q&A session is over. We would be grateful if you could stay back a little longer and complete this feedback for us. Okay, Miles, I do have one question coming up from a participant. I will go ahead and pass on the question to you through chat so that you can read out and then answer it for our attendees, okay? Just give me a minute. Thank you. Okay. Okay, there you go. I've just gone ahead and sent the question through chat messenger, Miles.
Okay, very good. If we pay an attorney using an Amex card, we're not required to file a 1099 miss for these services. That's correct. Well done. The merchant card provider will have to take care of it.
Great, thank you. Ladies and gentlemen, if you do have any more questions for our presenter, you can go ahead and ask your questions or clarify your doubts right now. I'd also like to keep all our participants informed. Now, if in case you come up with any questions even after today's session, you can go ahead and send in your questions to me through an email, and I can get that answered from our speaker at the earliest and send in your answers. Okay, Miles, I don't see any other question that's coming up from our participants. Let's give it about another additional 1 minute and see if there are any questions. If not, we will go ahead and conclude today's session, okay?
Just a quick review of a couple things. First of all, remember your policies versus regulations. Remember that I suggested to you that if you don't get a W-9, you could institute a policy of backup withholding if they force you to make a payment without a W-9. That's not law, that's a policy. And another policy was you can require the payee to sign the W-9 even though it is not required by law. There are specific reasons when they are required to sign it, and those are in the instructions below the Form W-9. Another one that we get quite frequently is, what if the company insists on including all travel reimbursements in Box 7? And you just heard me talk about that. It's acceptable, but they pay might complain. And then I talked with you about a deceased employee and a payment made on their behalf in the year after the year of death, and it's usually paid to the estate, in which case it goes into Box 3 of 1099-MISC. These are some unusual situations, or they're ambiguous and usually need a little bit of support. Then there's the issue of, does the W-9, what if we require signatures on all W-9s? You can do that, even though the law doesn't require it.
Thank you, Miles. And ladies and gentlemen, I would also like to inform you that if in case you feel that your team members, colleagues, friends might benefit from this webinar, we're happy to inform you that it will be available in the recorded format, and you can purchase it from our website, or you can call our toll-free number, which is 800-447-9407. Now, these are the upcoming webinars from Miles Hutchison. Now, if you do need more information, you can always log into our website, and you will get all the information about his particular webinars that's coming.
Okay, folks. Well, thank you very much for attending with us today. Ron, do you have any other closing comments?
No, I don't have any questions or any other comments for our participants, but I'd just like to remind them about the feedback form. I kindly request you to fill in the feedback form before you log off today's session. And I would also like to thank you all for being part of this webinar, and we welcome your suggestions or feedbacks and ideas on how we can improve our webinars. We look forward to having you with us again sometime soon. And on behalf of our presenter, Miles Hutchison, and the Compliance for All team, I'd like to thank you all for participating in this webinar, and I wish you a pleasant day ahead. Thank you, ladies and gentlemen. And Miles, thanks a lot for your time today. Have a wonderful day ahead.
Thank you. Goodbye, everyone.